You gotta be flipping my flapjack. Somebody knows something. Holy smokes, folks. A public account. I thought for sure I would open up my Fidelity app today and see the public accounts down. No doubt in my mind. And I open it, and the public accounts are $58,000 today. $58,000 today. It is day after day after day, just insane, right? The new Patreon portfolio is up 21%. I just started this portfolio in January, like literally this month, and it's already up 21%. Like, I'd be happy if that account gets, 21% a year. Like, that's amazing, right? It's gotten that just this month. Absolutely incredible, right? Absolutely incredible. And so everybody's like wondering what is going on right now in this market. And I want to obviously talk about that in this video. By the way, we're about to hit the 300th member on Patreon. Who's it going to be? I appreciate everybody that supports on there. If you're looking to join us on there and see all the moves I'm making in that portfolio, check out the pinned comment down there. Two questions I want to answer today. What's going on? We're going to talk about what's going on out there. I'm going to show you a lot of important things. And the second part is, why is this happening? Because all of a sudden, this market is going absolute beast mode. People's portfolios are all of a sudden skyrocketing out of nowhere. Everybody's looking and they're like, where's the good news? It doesn't seem like there's any good news. Earnings aren't great. Yeah, they're not a disaster, but they're not great. The Fed still has interest rates high. They're likely going to raise them higher. We don't even know when they're going to cut interest rates. I mean, it could be 6 months from now. It could be 12 months from now. It could be 18 months from now. We have no clue about any of that, right? But yet this market is running like somebody knows something that no one else knows, right? And it's moving insane now at this point in time. So we're going to get into all this. Hope you guys enjoy it. As always, thank you every single person that has subscribed to the channel. I appreciate y'all. If you're looking to apply for my private wealth group, check out the pinned comment down there also, okay? The NASDAQ is now up a whopping 12% plus this month. Or, excuse me, in the past month. In the past month, over 12%. That's insanity. Absolute insanity. It doesn't mean it's wrong necessarily when I say it's insanity. It could be actually correct, and maybe it should be making that move, right? Because remember, at the lows, the NASDAQ was down about 37, 38%. That was also insanity, right? But nonetheless, like, this is an absolutely insane move for the NASDAQ to make in a matter of a month. In a matter of a month, check out the Russell. The Russell, think of Russell as small cap stocks, 9% plus move in the past 1 month. Look at this next chart. This one's going to blow your mind. For anybody that's been in the market for a long time, this is going to blow your mind, this next one. Look at this. This is a NASDAQ versus a Dow. The Dow's up 2.7% in the past month. The NASDAQ's up 12.6% in the past month. The NASDAQ has over 5x'd the Dow Jones. That is insanity once again. It doesn't mean it's wrong when I say it's insane. It's just you don't usually see that. But also do remember the year we came off of last year where the Dow basically was about 20 percentage points better than the NASDAQ. That was also not natural. That should not have happened, right? That's pure insanity as well. And so this is a crazy past month nonetheless. When you see the NASDAQ 5xing the Dow, that is quite a substantial move. Tesla, is out of control. This stock climbed another 10% plus today. I mean, just when you thought, okay, it's been going up like insane, right? Today's got to be a downward move. Nope. Now, Tesla has a lot to do with options and these gamma squeezes and all these different situations, but nonetheless, this stock in the past 1 month is up nearly 54%. 54% in the past month. That's not even from the lows. That's just in the past month. It is incredible. And Tesla shareholders are making money hand over fist. 176. I mean, where's the stock headed? 200 real quick here? I mean, if this hits 200, folks, that's a double up. The stock was at $101 just a few weeks ago. Just a few weeks ago, this was a $101 stock. We go to 200, we're a double up. Imagine a double up in a month, maybe less than 2 months. Like, that's ridiculous. But Tesla just is showing, as far as the stock price goes, no signs of slowing down. And let's be honest, that earnings was everything you could have wanted. That earnings was everything you could have wanted as a Tesla bull. In terms of the guidance, in terms of, the way Elon Musk was talking, in terms of the team and the confidence around margins and revenue and demand and profitability, the cash, like everything. The next product cycle, the products in the pipe, like everything. It was everything you could have possibly imagined. And going into that earnings, the stock had been absolutely obliterated and devastated, right? And so it was kind of a perfect scenario for Tesla, at least in a short term, to just make an epic move. And is this move done? Probably not. I mean, it's probably not done. You gotta at least get some confirmation of a move starting to slow before you can even start to call it done. And this one's moving so heavy that it's not showing any signs of being done. And believe me, I've been in Tesla for years. The runs this stock can go on make you lose your mind. We're talking hundreds of percent fast, hundreds of percent, not 50%, hundreds of percent. And it happens quick with this stock, okay? And that's why this stock can build so much FOMO in it many times, because people see the moves it makes and they're like, I gotta hop on this bandwagon. Absolutely incredible what's going on there. If I look at the stocks I own, I mean, some of these stocks are just making absolutely insane moves. Honest, that's nothing compared to the move this stock will make over the next couple of years. Like, this is going to make a whole lot of 10% moves nonetheless, okay? Tesla, 10% move. Chef is trying to still figure out its way. We'll see what happens with that. That's my least confident stock versus an Honest that I'm extremely confident in. Fubo, nice move up, 4.6%. That one's starting to come back to life. Palantir starting to come back to life, 4.4% move there. Revolve, 4% move there. Meta, another strong move for Meta today. Meta shareholders, congrats to all you guys. You know, the risk reward on that one was ridiculous. That one's going to get close to a double up. That one bottomed, what was it, $88 a share or so? And, I mean, shoot, it has another week like it had this past week, and next thing you know, this will be a double up stock. Oatly, 3.4%. On the Planet, 3.4%. Amazon, 3% move today. Look at Shopify. This is almost a double up now. Shopify bottomed around $25 a few months ago. $25, and this baby's almost at 50. It's almost doubled up now at this point in time. Google McDougal, we'll see what happens with them. They have a lot of issues kind of facing that company, but nonetheless, I mean, these moves, it's like day after day after day, just great moves, right? Check out my big tech watch list. Tesla says, I'm the captain now, okay? Remember the movie with Tom Hanks? I'm the captain now. That's what Tesla's saying to all the other big tech companies. I'm the captain of the ship. Get behind me. Follow my lead. And it's going to be a huge week next week for big tech earnings. Absolute insanity. But Tesla's taking the lead over all these babies. But I mean, it's a lot of green out there. Intel, super disappointing earnings. They can't get out of their own way. And that company's just in a tough place in the short term, at least. When I say short term, I actually mean over the next year at least for Intel. Really, really tough place for that one. But yeah, big tech climbing across the board, right? Now, we're kind of dodging a bullet here. I'll be honest, we're dodging a big bullet. If we look at the commodity index, this baby hasn't really done much over the past month. It's barely up in the past 1 month, while the Nasdaq's up 12% plus over the past month. The commodity index is basically break even over the past month. So that is something to be thankful for, because with the Nasdaq being up 12% plus over this past month, you would have thought this commodity index would have climbed 5%, maybe 10%, something like that, in a considerable manner, and we just haven't seen it. So that's great news, especially if you're still worried about inflation, all those sorts of things. We can't have commodities pop in a significant way. If commodities pop huge, guess what's going to happen? Inflation's going to spike again. Fed's going to have to keep raising interest rates, and all this excitement about the Fed stopping raising interest rates at some point here in the next few months, or something like that. If commodities pop huge, inflation's going to spike back up, and that'd be an ugly situation. Okay, now something strange is going on with these home builders, and I'm like, what is going on here, man? A lot of these stocks are now at 52-week highs. 52-week highs for home builders. What in the world's going on? I have a little theory on what could be going on in this scenario. I think there could be certain market participants that believe the recent economic cycle we've been going through and the recent market cycle we've been going through is very similar to what happened in the tech bubble, right? Where you saw actually a small recession. You saw tech stocks get absolutely slammed in growth stocks, right? But you made it through. You never had a super deep, awful recession, and the economy started to grow again. And coming out of that, home building got into an extremely strong cycle from 2003 to 2006. Home building was on fire for those years. And so I do believe there's a certain segment of the market that believes we're going to go through, that believes, and I know this is kind of crazy to think, but some of these folks actually, I think that we did not actually see the top of housing in this most recent cycle. That was just kind of let's get up there, come down a bit, and we're actually going to have the blow off top over the next, let's call it from 2024 to like 2026 or something like that. It's not personally my belief, but I believe there's a certain amount of folks in the market that do believe that. And the reason I'm seeing that is you look at these stock prices at 52-week highs for home builders. What do they have to go off of? Their backlogs are starting to dry up, right? Their backlogs are starting to dry up. Home pricing is obviously coming down. In terms of mortgage rates, are still expensive. Home affordability is not good at all, right? And so it's almost like they're trying to see to the future. And they're saying, yeah, this year's not going to be good, but 2024, 2025, 2026 are going to be great years for the home builders again. And that's when we're really going to have the blow off top before we really have a housing crash. So I don't know. I don't have an opinion like that. But I think the market is running to these conclusions based upon the pricing of these housing stocks. It's pretty darn clear. I mean, you can pull up almost any of those stocks, and almost all of them are at a 52-week high when it comes to home builders, that is, right? Toll, like I said, D.R. Horton. Look at D.R. Horton. It's a blow-off top here. CCS, KB Homes, Pulte Homes, a lot of those stocks are near 52-week highs or at 52-week highs. That's an incredible move there, okay? Wynn Resorts is making a ridiculous move. This stock is up nearly 80% in the past 3 months. This stock I personally own in the dividend account, and for those that have followed me for many, many years, I've talked about Wynn for years, okay? Now, my personal belief on Wynn is it's not really necessarily a great time to jump in now. I think a few months ago, if you want to take that risk reward when it was in the 50, 60, I can understand it. But now when it's 100 plus, you don't know what could happen in China, right? There's a lot of optimism about China coming back online, growing, the economy, and all those sorts of things, and I think that's great. I think China's made the right decision for their citizens now at this point in time. And it seems like it's packed. Macau's back roaring again, okay? And it seems like it's just the start of Macau roaring again. I mean, the photos are very optimistic. But at the same time, you got to understand, when dealing with anything in relation to the Chinese government, you can't put too much faith in these folks because they've let us down time and time again. So it's great to see. I love seeing Wynn stocks start to roar. I love to see Macau coming back online. I love to see the Chinese citizens be allowed to live life again. That is something that I like seeing. But you can't put too much faith in these folks because at the end of the day, we know the Chinese government, man, they can be not as practical as they once were. They used to be a very practical government that, yeah, they were, their whole system, which, a lot of us don't believe in, but at least they were like practical about their decision making. But over the last, I would say, 5 years, they began to break that mold and start to become a system that's not practical whatsoever, and their decision making becomes very, So nonetheless, it's good to see. Can't get too excited. Now, who's doing this? Who's doing all the buying, right? Because that's what folks are wondering. What's going on out there? Is this just a bear market rally? Is it sustainable? Those sorts of things. Let's talk about this. So first thing is this retail? Because some folks think, oh, this must be retail. Every time the market goes up a ton, they're like, oh, it must be dumb money buying it. No, dude, retail's broke. Retail doesn't have any money right now. Retail's broke physically, like mentally, and in their pockets right now. So no, okay? Retail left this market back at the end of 2021 and into 2022, and I've been saying that for a long time. Retail's long gone. If you look at any metric, retail left the market, okay? All we have is the diehards that are in this market for the next 10, 20 years now at this point in time. It's silly to say, oh, this must be retail pumping trillions of dollars in the market. Give me a break, man. Come on. If you look at something like Google Trends and you just type in like popular terms like stocks, right? We had the peak, and this is crazy because this is literally right when spec stocks and growth stocks peaked. Literally, if you pull up a stock chart of like the ARK fund and like stocks, all of the speculative stocks, the growth stocks, they all peaked right here. And then in February, they started going down. It's crazy the correlation between Google Trends and essentially, what happened with those sorts of stocks, right? And ever since then, it's down and out, and down and out, and down and out, and down and out. And it's just gotten worse and worse and worse. So retail's long gone out of this, and retail's not ready to get back in, even though the market's starting to climb. Other than obviously the diehards, folks like myself, folks that are watching this video right now, right? We're the diehards of the market that just play this for the long term, right? But in terms of the tourist of the market, they're not going to be attracted anytime soon. The reason being is they got hit so hard, and a lot of those folks think the stock market's a scam. Like most of the folks that got in the market 2020, 2021, they think the stock market's a scam now because they got absolutely obliterated, right? And so those folks, like, they're not going to be sold anytime soon. Like the market would have to like double from here. Like the NASDAQ would have to go from like 11K, 12K to like 20 something K for those folks to be intrigued again. And there would have to be a politician in office, a president, that a lot of those folks also like and think is good long term. So in terms of the retail crowd, unfortunately, if we have started a new bull cycle, which I'm not ready to jump to those conclusions, but if we have, retail's not even going to participate in this other than the folks that are diehards like myself and you guys out there. We'll participate. We'll make tens of thousands, hundreds of thousands, or millions of dollars. But unfortunately, most of retail won't. They'll have waited until all of us made so much money, and then they'll jump in, and then maybe we should keep an eye on Google Trends next time. And maybe when we see that crazy spike, maybe it's time to lighten up. Let's just call it that, okay? Maybe it's time to lighten up because the tourists will come back. But they're not coming back anytime soon. Those folks are long gone now at this point in time, okay? And another telltale sign of this is look at margin debt. Margin debt's all the way down to the lowest we've seen in a long time. If you look at the month of December 2022, right, which is the latest data we have, there was about $606 billion of debt, margin debt out there, right? And that compares to the peak, which was 935. Insanity, right? Now, if we look back to the first time we crossed over 600, it was in September of 2017. That was the first time we ever crossed over 600. So basically, we're back to the same margin debt levels in terms of debit balances and customer securities margin accounts. We're back to the same level we were in September 2017, roughly 5 years ago or so, right? So that's pretty extraordinary to see, and I think that's something that definitely I love to see. I don't want to see, margin debt at all-time highs, although you got to understand as the market gets bigger and bigger over time, as market capitalization gets bigger and bigger over time, as more and more money gets in the market over time, margin long-term should set records over time. And it doesn't mean necessarily the market's super risk on, it's just that's the way the market goes. If the market goes up more, you're going to have more margin debt out there. If there's more money in the market, you're going to have more margin debt out there. That's just the way the system works, okay? But to see how much margin debt goes down definitely goes to show you how much retail just cashed out of the market. It was the most vicious kind of cash out from retail we've seen since the tech bubble blew up. It's way bigger than the great financial crisis, because going in the great financial crisis, the stock market hadn't attracted retail really. The stock market, was kind of in still a period of like, the stock market hasn't really attracted retail until, the 2020, the Rona situation, right? That's what attracted retail again. And so we hadn't seen that since the tech bubble. Now, is it big money? Is it the hedge fund managers? These sorts of folks, right? The activist money managers. I think definitely they have some sort of say in this, right? I think a lot of them have seen retail leave the market. That gives them some comfort. They know the majority of the Fed's work is now behind them. I think that gives them some comfort. I think a lot of these fund managers, based upon what I hear, aren't necessarily convinced we're going into any sort of great financial crisis. They think it's more of like a small to mid recession, right? And so a lot of these fund managers are probably looking to step in. Especially a lot of these beaten down tech stocks that are down 50, 60, 70, 80%. And I told you guys many times, these fund managers are not going to be able to stay away from those stocks. If you think they don't want to own Netflix and Shopify and Meta and Tesla and all these stocks, you are sorely mistaken. And I told people this for months now. Like, these folks want to own these stocks. This is where they really want to be. You think they just want to hold Campbell's soup stock? Give me a break. You think they just want to hold ExxonMobil stock? Give me a break. They want Shopify. They want Tesla. They want Netflix. They want all these stocks. They want Amazon. That's the bottom line with this, man. They can put on this facade for the short term, like, oh yeah, we want this and we want that. No, okay. You want the growth stocks. Don't lie to us. Tell us what you really want, okay? And so definitely I can see some of these managers being buying over the past few months and sending this market up higher and higher and higher. And some of these folks are activists. Valuations have come down a lot of stocks, so some of these activists like to get involved in one of those situations where valuation's down huge and they feel like they can make a change to the company, make a bunch of money, make a few $100 million real quick, make a few billion real quick, and get out of that stock in a 12 to 24 month span nonetheless. Okay. Now, next component of this is it's algorithms. Okay. Algorithms, absolutely. This is an old statistic that was basically talking about algorithms make up 60 to 75% of overall trading volume. I think if we were to get an actual update as of 2023, I think really it's like 80 to 90% of this market's now driven by algorithms. And in regards to that, these moves are very, very silly, okay? And as somebody that's been in this market since I was working back at Walgreens back in like '08, right? As somebody that's been doing this for about 15 years now, I can tell you the algorithms are becoming more and more of an issue. More and more of an issue. Now, for us longs, it gives us the most tremendous opportunities. But I'm telling you, these algorithms are out of control. They're sending stocks up to ridiculous valuations, as we obviously saw in the blow off top of January, February of 2021, right? And they're sending these stocks down to ridiculously low valuations now at this point in time, right? And you see that in some of these stocks that it's just like, how is this, like, how did Meta go over under $100? How did Tesla go down to $100? Are you kidding me? How did Shopify go all the way down to $25? What are we talking about here? How did all those small cap stocks fall 80, 90%? The reason it did it is algorithms. And it doesn't make any sense. These stocks shouldn't get pushed down to these levels, but they do. And so as longs, we get these incredible opportunities to buy some of these stocks at honestly very silly pricing. It doesn't make any dang sense, but we get those opportunities. And I can tell you, if it was all humans, we would never get these opportunities because humans are more practical than that. They're not dumb. Like most humans aren't selling Tesla stock at $102, okay? They might be trying to bet against it because they're not so smart in that sense, right? They're not selling Shopify in mass at $25, man. They're not doing it. They weren't selling Meta in mass at $100, at $90, sending all the way down to 80s. They weren't doing that. It's the algorithms, man. And so it gives us as longs these crazy opportunities to buy stocks at just silly pricing. And so honestly, algorithms are probably the best and worst thing to happen in the market. The machines and all this machine trading, it's a dumber market than it's probably ever been, to be quite frank. But as longs, it's the best thing that could ever happen to us. As long as you're staying away from things like short-term calls and puts, and you're staying away from things like, margin. Because these algorithms will wreck you. Because they will make moves that don't make any sense in the short term. And you're like, what? This is so stupid. Why is this stock going up so much or down so much? And so that will wreck you. But as long as you're staying away from those things, they're going to give you the best opportunities in the market to make just stupid money on stocks. And you're going to be able to get returns of 20, 50, 100, 200% on stocks in very short amount of time. Mainly because these algorithms push stocks down way too low, way too fast. And those stocks end up bouncing back to reality. So, hope you guys enjoyed today's video. As always, I appreciate every single person that subscribed to the channel. Thanks for being here. Also, if you're looking to join us in the Patreon, who's going to be member 300? We're dang close. That will be pinned comment down there. See all the moves I'm making. Also, if you want to join my private wealth group, that will be pinned comment as well down there. It will also be linked in the description to apply to join us in there. Thanks for watching. Have a great day.